Well, Senator Thune, thank you, and thank you so much for your leadership on the Business Tax Working Group. I also want to join you in thanking Senator Hatch and Senator Wyden for their leadership in convening this hearing, but also in establishing the working groups. Our working group produced a report of 140 pages. I particularly want to thank Mr. Barthold and the Joint Committee on Tax for their extraordinary work. I said at the conclusion that I learned a lot. I thought we were gaining Senate continuing education credits, and we didn't have to pay any tuition for it. So it was a great learning experience for all of us, and I thank you for that. I agree with Senator Thune in that our high tax rates on businesses in America is making America not competitive. We are definitely at a disadvantage in international competition because of the high business tax rates. And that, I think, Democrats and Republicans agree we got to do something about it. The C corporation rate at 35% is not competitive, compounded by the fact of double taxation. And Senator Thune and Senator Hatch and others have brought forward proposals in this regard. And the chairman just commented about it, and it's an area that we certainly need to take a look at so that the business entity form doesn't discriminate against a business, and that's clearly an issue that we need to deal with. But as Senator Thune pointed out, 90% of American businesses don't pay the C rate. They pay the individual rate. And that rate at 39.6 plus is not competitive. So we need to deal with the realities of both the C rate and the individual rate in dealing with business taxes in our country. And although we want to talk about major tax reform, we shouldn't lose sight that during this process there are so-called smaller reform issues that can help a great deal, like S corporation reform, that we should do. And we should try to get that done as quickly as possible in order to help America's businesses. The challenges in dealing with the high rates are incredible, and I just really want to put this on the table so our colleagues understand the challenges we have if we're really going to do major reform for business taxes in America. First, it is a huge revenue issue in trying to reduce the rates under the existing structure. If we use the existing structure, for every 1 percentage point reduction in the C rate, joint tax has estimated that would cost $100 billion over 10 years. So you can do the math. Most people want to reduce it by as much as 10 percentage points. That's $1 trillion. And that doesn't deal with the individual rate. And as we've talked about, we need to understand that there's need for help on the individual rate with business income, and that could add anywhere between 60 to 80% more to the cost of any proposal that deals with reducing the rates. So on the other side, if we say, well, let's do what we did in 1986, and that is let's just spread the burden and reduce the rates, that lasted until 1987. So I would suggest politically, I'm not sure that's possible for us to leave the tax code alone for any significant length of time. So I just really want to just challenge the committee with something which is somewhat counterintuitive, and that is that the United States, among all the OECD countries, is one of the lowest on its reliance on the governmental sector for its services. So why should we have the highest marginal rates in the OECD countries? We should have the lowest marginal rates in the OECD countries. And the reason, quite frankly, as it was pointed out during our study, is that we're the only OECD country that doesn't have a national consumption tax. There's about 150 countries globally that use a national consumption tax for part of their revenues to finance government. So for those reasons and many others, in the last Congress, I introduced a progressive consumption tax that would replace some of our income tax with a national consumption tax. It dramatically simplifies our income tax code, particularly on personal income, by simplifying it and starting it at $100,000 of taxable income, with the highest rate being 28% for that taxable income for families over $500,000. It would reduce the corporate tax rate to 17%, giving us a significantly lower corporate tax rate, and would establish a national consumption tax at 10% using the credit invoice system, which we think is the most efficient way to do it. It's progressive, starting the income tax at $100,000 and cashing out the earned income tax credit and the child tax credit are actually cashed out in order to keep it progressive. And it's revenue neutral, and it contains a circuit breaker that in the event the joint tax numbers aren't exactly accurate and we produce more revenue, there would be a trigger mechanism to return those excess taxes to the taxpayers. The result, we would have, on average, about a 5 percentage points lower average on all of our taxes, income and consumption, than the OECD countries, giving us a competitive advantage rather than a competitive disadvantage on international issues. Mr. Chairman, I just really want to make this point. I think this committee needs to be in the leadership of tax reform. I think we can be in the leadership of tax reform. And I think the work that was done by the working groups, we have become, I think, more understanding of the challenges we have. And I just urge us to work together so America, in fact, can have a tax code that's a lot easier and simpler and more efficient on capital and growth than our current tax code.